Hey everyone, I wanted to go ahead and take a look at CyberArk's stock chart here. The last time I talked about this particular stock, I recommended an entry around this day here and suggested that this would go higher based on a secondary form of the chopsticks pattern. In this form of the chopsticks pattern, we have the primary downtrend leg and then a secondary downtrend leg due to a sharper decline within the pattern. And this area here, this secondary downtrend line provided an earlier entry, and thus a break of this line would suggest that we get into the trade. One thing I really want to emphasize is risk management. And if your stomach doesn't turn in a trade, it's going to be a lot easier to hold the trade even through a market pullback. So when you look at the chopsticks pattern, you need to identify the lowest price candle, and that would be your stop area. Now you can keep your stop at exactly the low of this candle, which is 47.51. You can put it a nickel below, or you can even put it 1% below. It all depends on your own use of the pattern. But having established a stop price, you take a look at your entry price and then calculate how much you're willing to risk. So for some people, risking $500 is comfortable for them. Other people, risking $10,000 is comfortable for them. So based on that number, you're going to calculate how many shares you are going to buy at the entry price. So that allows you to hold it until it gets this low without even thinking about it. Now, if you get, if you buy too many shares, if you buy 10,000 shares and this thing pulls back 50 cents and you're down $5,000, and that's 3 months of your salary, or more than you like to lose, you'll be shaken out here. You got to let the stock move down and up and work its way up. This had to sit through a market pullback. I talked about this in Baidu's video also, is you got to give it time to work its way up and down. So the way to manage that, get rid of your emotions, is figure out how much money you're willing to lose without that gut-wrenching feeling of wanting to get out of the trade. And this is very important. It helps you to stay in. When I tell people to make an entry and it goes backwards for a little bit, it goes down for a little bit, I always get the inevitable question, should I sell it? And that answer to that question should have been answered when you enter the trade. I will sell it at this price and will be willing to risk $500, $5,000, $50,000. Whatever your answer is, whatever your comfort level is, that's how many shares you should get into. Don't always put 10,000 shares for every trade. It doesn't make sense. That's not risk management. So if you were comfortable with this trade, you sat through this pullback, and you're heading higher. Depending on the entry of this day, you would have had 8 to 12% gains thus far, and you will probably get more gains from this stock. But if you were not comfortable and you got shaken out here when the market pulled back, you'd be kicking yourself in the butt now because you missed this move up. So in any case, this was the first entry. We had a potential entry here on this candle and another possible entry here along this candle. For the safer traders, you would have bought off of this high or when this candle made a high, and you had multiple opportunities to do that as well. Now, this looks like, as it always does with this pattern, with the chopsticks pattern, that the cup is forming. If you can see here, we have formed the left side of the cup, and now we're building on the right side of the cup. So that's what the chopstick pattern allows you to do, is identify the earliest possible reversal pattern, and usually it'll coincide with other patterns, and mostly the cup and handle pattern. So while some other traders will get in here waiting for the cup to finish, you'll be able to make an earlier entry and get some solid gains before we return to the edge of the cup here. So based on today's action, we go ahead and take a look at today. We see here the 10-day moving average. We went up and pulled back, a nice orderly pullback. We went below the 10-day but reversed higher. So this is suggestive that we would have a continue higher here. We'll probably break out of this mini downtrend line tomorrow, depending on market conditions. If you wanted to get in on this, I would suggest a buy stop around 59.30 based on the high of this candle, or you can also get on the high of today's candle is 58.92. So hopefully it's going to continue climbing up the right side of this cup. I want to go ahead and take a look at XRS's chart. You see here, it's the same thing. We had a chopsticks pattern breakout here, and then a climb on the right side of the cup here. So it's going to be the same. I'm hoping it will be the same sort of trade here, where we can go from here. You can get to the cup 69.66 area, and that right from even from this point here, there's still about a 20% gain. If you were very skilled and you got in this low of this candle to the top of this cup, you're going to get a 40% gain. So this is a really good pattern to get into your trade. So keep an eye on this tomorrow. Looks like we should expect a big move up. So using a buy stop will increase the probability of your success. So that's it for this video. If you liked the information in this video and found it educational, please click on the like button. And also, if you'd like to subscribe to my channel, go ahead and click on the subscribe button below the video as well. If you'd like to watch the last CyberArk trade video I did, I'm going to put a link here that you can click on to go ahead and watch it there. I also discussed VDSI in that video. So thanks so much for watching.